Hey everybody, George Moorhead here, and today we're going to talk about the Fed rates. So what I like to call it, the Feds, the rates, and you. I guess it's a little different than the good, the bad, and the ugly, which, was a great Clint Eastwood movie. But anyway, again, my name is George Moorhead with Bentley Properties. Been practicing about 26, 27 years, and we've done over 2,000 different residential commercial transactions. So we've got some great metrics for you, some good feedback, and what to expect, really, as we talk about the Fed stuff. All right. So before that, a couple of shout outs here. First of all, we have a new team member. We have Linda Alley, absolutely amazing. She is a realtor in New York. She also is was served in the Army. Thank you for your service. And she comes to us with an amazing amount of passion. She has an absolute just passion to learn. She's high energy. She's just absolutely awesome with people. And her knowledge and skill sets are going to be an amazing contribution and asset to our team as we continue to grow here. So with that, talking about growing, so in the past, we've talked a little bit about contractor pitfalls. And, we have the site, bentleycontractors.com, BENTLEY, contractors.com, right? Okay, why? One of our clients sent me a message on Thursday saying, oh my gosh, how do I fix this? And I said, that's a little bit of a problem. And she's like, I know. And I said, well, what happened? I said, was this, this couldn't have been one of our plumbing contractors. She's like, no, you see, your guys were going to take about 2.5, and one of them was about 3 weeks out. And there, there was a couple extra dollars involved, like, I don't know, I think it was less than 1% difference. And when she went back to her house, she's having everything replumbed and whatnot, there's the big drag marks on her hardwood floors, big scratches, and I do mean big. And, of course, they didn't finish, when they cut out for plumbing, right, they didn't finish. They didn't frame things back in again. She doesn't know how to do that. So the sad part is now these plumbers, my understanding, may have gone dark. And therein lies the problem, right? Guys, use the vetted list. There's no login, there's no cost. But we have verified them. Oh, good grief, would you go and use them? Because if you have a problem with them, I can help fix the problem. Why? Because we only work with, on a scale of 1 to 10, 10 plus are the only contractors that make that list. And people, many of them I have worked with for over 15, 20 years as I've been building homes. So please, it's better to spend a little more than you planned than a little less than you should have. Because had they been willing to wait a little bit and pay just a tad bit more, they'd had an absolutely stellar job. Now we're going to have to see if we can send one of our guys in to fix it, which, guess what? Her savings now just became a cost. Okay, in a lot of different ways, because I'm not sure we can fix our hardwood floors. That's pretty deep. Cast iron tub, drag across the floor. That's a lot of sanding. I don't know. We'll have to see. So anyway, don't make the mistake. Go to the vetted list. There's no cost. There's no login. I don't even know you're there. Just tell the people that we referred you, and then you get our pricing and whatnot. Plus, let me know, really, because then we can help you out. All right. Let's get on with today's show. Okay, Feds. The Feds, it hit the news, dropped short-term rates by 0.25, right? 25 basis points. A basis point, right, is 1%, right? 100% or 100 basis points is technically 1%, is 0.01%. So 100 basis points is 1%. So if we have 5% interest, they drop 100 basis points, we now have 4% interest. We have a 50 basis point drop, we go from 5 to 4.5. Okay, you get it? You got the math? All right. So 25 basis points, they dropped short term. And this is why this is what prompted this class today. All right. People are like, oh my gosh, the rates are awesome. They just dropped them again. And I'm like, no, dude, you don't understand. That is not short-term and long-term mortgages two different games. Short term, that's going to benefit your commercial loans. It's going to affect your ARMs, some credit cards, HELOCs, things like that. Not really your 30-year mortgages. So sorry to pop your bubble there, but let's be real about it, because actually it has sometimes the adverse effect. So you might say, George, okay, so what's all the hubbub, right? The Feds dropped their rate. Is it going to really affect my mortgage? And sadly, no, and let's go through that. You might say, okay, why did they do this? Well, the concern is that we've got some sagging business confidence, right? They still have concerns over some of the tariffs and some of what's going on with the trade war, right? And we're seeing a tad slower economic growth than what they would like to see. So to do that, again, short term, give a little zap to the commercial side of things, give it a little life, right? Now, why would they do that? Okay, the Fed's rationale is simple. If we cut rates today, while the economy is still technically expanding, right? Instead of waiting for the onset of a recession, they've got some margin to play with. Because remember, they've got a profit and loss too. And they have to deal with this margin of profit, right? So right now they have a greater margin. So if they start reducing that rate and excite, it's like if you're on watching one of the TV shows and they have the paddles, right? You have your little defibrillator, bam! They give these guys a little extra life, except for they're not dead yet, but you get the gist of it, right? So the whole intent is to excite. Yes, it's going to create a little bit more inflation. They know that, but they're also monitoring those metrics. But they need to give it a little bolster, a little bump, right? Okay. What will this do to the 30-year? Actually, it's probably going to have an adverse effect, meaning that rates are going to go down on 30-year mortgages. They're probably going to hedge back up. So right now, right, we're at about 3.6, 3.75. Freddie Mac's at 3.75 today, right? 30-year mortgages, 20% down. Okay, so 3.75. The reality is we're probably going to hedge upwards just a little bit, right? Short term, like your ARMs, anybody who has a variable rate mortgage, an ARM, adjustable rate, right? Or a commercial loan, okay? You're going to see a mild, let's qualify that, a mild decrease, right? Meaning that your payment should go down just a tad. Commercial loans, if you're not aware, it's prime plus, right? And that's where they get their margin from, because banks say, I need to make this profit amount. So whatever the Fed rate is plus my profit amount, that's prime plus, it gives you a rate. By doing that, it helps to put money back into the economy, because businesses aren't paying it an interest rate. They're able to then put that back into projects, into commercial developments, buying commercial property to build multifamily home. It might be to buy or build a commercial building, okay? These things help to kind of bolster that up, and that's why the short-term rate drop. All right, so builders and developers, how does this help them? Well, if the cost is less, and since right now, one of the biggest holdbacks is cost of construction, which has gone way up, actually quite a bit, along with the fact that we have a shortage of workers. So because we have a shortage, supply and demand, right? The cost of workers goes up. And if we have cost of building material going up, that is why we have seen real estate, as far as new construction, outpacing the income levels of the prospective buyers. And they're saying, how does this keep going up? It's gone from a seller's market to a buyer's market. What the heck? What's going on? Well, the problem is that the cost, right? Because if a builder looks at a 20% margin on construction, and the cost of construction goes up, the cost for that mortgage for the land development goes up, and our labor is going up, what do you expect? That's what happens. So this is a benefit in a lot of ways. Now, does that mean tomorrow we're going to see the cost of construction go down and everything else and home prices going down? No. Okay, it's like the tortoise, slow, very slow, and many times it is slow to react. So this is nothing that's going to have any imminent impact on you today. In fact, in the next 30 days, minus 30-year mortgage rates, you're probably not going to see any difference unless you have an adjustable rate mortgage. Okay, you might see a small difference. Not much, but a small difference. All right, so because we're at 2016 mortgage rates right now, and Freddie Mac says, yeah, I think rates are going to probably go up. They will probably hover between 3.6%, 4%. Talked to Dan Golden this morning just to kind of get his insight, since he's a pretty smart dude, all things considered. So when I was chatting with Dan, Dan's like, yeah, you know what, George, I do actually expect a little bit of a bump in 30-rate mortgages. It's going to stay below 4% for 20% down programs. And I don't expect, monumental changes over the next year. When we were talking about, 2020, what do we see? Hey, flatter market, a little bit of a recession, even though we've got great, the lowest jobless numbers, or the unemployment numbers in 50 years, right? We're absolutely doing pretty well, all things considered, minus some of the other stuff. So if you really want to know what's going to happen now, what do we need to look at today, right? We need to watch kind of the economic expansion, right? Make sure that you're watching your 10-year treasury, watch your bonds. Those are the ones that dictate what mortgage interest rates are going to do when we talk about long-term, right? 30-year type mortgages and whatnot to keep in mind. Will the Feds lower rates again as far as short-term? Possibly, entirely possible. They may do it one more time in Q4. They're going to hedge right now. Personally, I think it's a 50-50 chance. I'm not sure that it's going to, but we'll see, right? Construction starts, it's going to have a small effect, not a monumental one. The benefit is that if we can continue to bolster that, still mitigate inflation, that's where the end consumer is going to see some benefit. But again, we're talking, 8, 9, 10 months down the road at the earliest. Nothing imminent, all right? So don't expect much to change. Again, watch your 10-year treasury, watch your bond market. Rates this year between now and Q4, fourth quarter, they're going to stay between 3.6, 3.75, and 4%. Again, for 20-year down. If you're less than that, you're going to bump up to about 4.25. I don't see us getting to 4.5 on less than 20% down, but you never know. And if you're on the fence right now about locking your rate, you might want to actually consider that, because again, when we see something like this and the stocks start rallying and we get everything else starting to move, in the economy, right? Many times that does affect and has an adverse effect on your 30-year mortgage. So yeah, you might want to take a serious look at that. Talk to your mortgage officer. If they don't give you a very well qualified, very clear, concise answer, feel free to give me a jingle. I'll shoot you over to Dan Golden if necessary. Julianne over at Qualistar Credit Union. Two absolutely awesome sauce people. They have great information, great metrics, so you can make the best business decision for you and your family. All right, that's it. Sorry to bust your bubble today. There is no great and glorious 30-year drop down to some amazing rate, but there are excellent consumer news out there regarding the fact that we're going to bolster the economy, monitoring inflation, which in the end of the day actually helps you, right? Just not with your mortgages. So with that, have an absolutely beautiful day. Again, Linda Alley, welcome aboard. Thank you. Absolutely love you. You're going to be just an amazing asset. And I will chat with you guys later. And again, don't forget to like me. Send me a note. Ask me questions if there's anything you need, and go to the Bentley Construction or BentleyContractors.com site, www.BentleyContractors.com. I'll have Marie post it again, and we'll post some 10-year bond stuff if you need it. In the meantime, have a beautiful day. I'll talk to you guys later. Thanks. Bye.